And we are live. What's up, everybody? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, as we all know, and I made it my mission to help you guys own it. And sometimes I rely on you to help me own it. It's what's great about this community. So welcome. Hopefully that if you are returning, welcome back. Hopefully that if you're visiting for the first time, that I earn a subscription from you, because I do this every day from Monday through Thursday at 3:45 p.m. Eastern time to react to whatever earnings are coming out this afternoon. We also react to whatever has been going on during the day as well. I got a lot to cover as far as this morning's earnings, which I thought was very promising and kind of exciting. So stay tuned for that. But we have items to cover, guys. The stock market is absolutely ripping face right now. I'm looking here. The S&P is up 2.21%, which is good for 87 points. My goodness. And the Dow is up nearly 600 points. It looks like it's going to try to close the high of the day. The NASDAQ is up 332 points, which is good for nearly 3%. Russell 2000 is up 2.25%. But also, we got WTI crude that's up 113, almost $114 a barrel. So watch out there. The oil crunch, gas prices aren't going anywhere. And in fact, they're probably going up at this point. Who knows? But we have also some really exciting earnings this week or today to cover as well. We got Costco, Marvell, Ulta, ZScaler, Autodesk, Workday, Gap, Dell, American Eagle, and a couple of other ones if they interest you. But guys, those are your earnings that we're going to be reacting to today. Costco, I'm certainly excited about. Before we get into anything else, of course, let me hit you guys up with the starting five. John Gosson, Jeff Panicka, Tracy H., Housekeeping, and Savvy Money Show. You guys are our starting five. Guys, if you missed the starting five, it could be because you're not subscribed or hit that notification bell, so make sure you do that, and you guys might just show up on the next starting five. So what's going on, everybody? I mean, unbelievable day so far. Really crazy stuff on an absolute, wild move. Yeah, Jonathan Schreiber. Yeah, Dutch Brothers up like 20%. Dutch Bros. God damn it. I always keep saying Dutch Brothers. Dutch Bros. Somebody's going to come out and give me the hate for this. It's only up 17% now, but still a hell of a day. I think it was up as much as 20% today. But yeah, Dutch Bros, unbelievable move there. Really, the entire market has been doing really well. So I'm actually going to, before we get into it any further, I'm actually going to be, let me put up a poll. I always do this. And this is actually going to relate to a video that I'm putting out tomorrow. What? Brad's putting out a video on Friday? Sure am. Here you go. Have we seen the bottom of the market this year? I'm going to put the poll up in here in the chat, so make sure you guys are participating in that as you're waiting for that. Also, make sure that you're hitting that join button next to subscribe, or you can go to the link in the description and get your free watch list. If you guys don't know already, you need to know that you should be a part of the Chaos crew. Each and every morning, I put put 5 stocks out that I think are worth watching that day and potentially beyond. I mean, there's a couple repeats on there for good reason. One of my greatest calls of the year, actually the greatest call of the year, that was on the Chaos crew watch list multiple times. It's probably been the most appeared stock on the watch list, and I've actually been calling this out since last year, since about June of last year. Marathon Oil has been on the watch list, and it's only gone up, over 100%, about 120%. Here's Marathon Oil. I called this out around here back in June of 21. And this year it has just gone absolutely ape shit, and it's gone up like crazy since June. Crazy moves that it's had. It hit 52-week highs again today, ladies and gentlemen. Blasted right through $30 a share. This is an energy play that has done extremely well. If you guys weren't a part of the crew, then you missed out on this. So don't miss out on the next one, okay? Hit that join button next to subscribe, or again, the link is in the description too. You have the option of getting the free watch list, which is a limited version. You can get 3 stocks instead of 5. So if you want to go check that out first, of course, feel free to go do that at ownthechaos.com. Okay. So, yeah, this is great. Phil Stroh says I'm running on free shares with MRO. So he's taken out his investment and has just playing with house money. Love that. Robert, so yeah, we're going to get into the Costco stock prediction. So Costco has earnings this afternoon, as you guys know, and we're going to cover that. So what's the expectations first? This is highly anticipated, and I'm actually really excited for these earnings. So let's just go over the numbers real quick. Costco is expected to come in at $3 per share. Some have $2.99. $51.76 billion in revenue. Unbelievable revenue for the quarter that they're expecting. Just a little few tidbits information. I love this. A company went public in December 5th of 1985. Guess how much it was? $10. $10 a share. Right now, guys, Costco is trading at what, 4 something? 466 is what it's up to today. It's up around 6% on the day. That is pretty crazy. $10 a share. Adjusting for stock splits, the initial price per share was approximately $1.67. Woo! Crazy. During the second quarter earnings call in March, the last quarter, the CFO Richard Galanti signaled that a membership price hike could come as soon as June. Could we hear that in this earnings? We'll have to see. I think that's probably going to be a thing. The executive membership, I believe, is what, $120 a year? Memory serves me correct. Same store sales are expected to increase by 9.1%, and the bulk of Costco's profits coming from the membership model. And this is going to be the keys to the game. I need to come up with a theme as far as this is concerned. Please, guys, for those of you in the Chaos Crew, for those of you watching, give me something. You know how they always have keys to the game? You're watching football, basketball, whatever. There's always the keys to the game. I need keys to the game, but I need a play on words as far as the stock market's concerned. So help me out there. I know that I can be creative, but there's a lot of other creative guys out there and gals. I want to hear from you. Let me know what I can do for this. So there needs to be like keys to the game for each stock that we're watching for earnings. I really want to kind of like dive into this a little bit more. So let me know on that. But what I thought was interesting, right? Costco, let's take a look at the stock right now. Costco, this massive gap down, and it's been moving down significantly because of Walmart and Target. To me, this is unfounded. And one of the big reasons has been because Walmart and Target aren't necessarily an apples to apples comparison, right? Costco has that membership fee. And if you have a membership fee business model, similar to what BJ's has, let's take a look at BJ's. They had incredible earnings that same week that it tanked along with Target, Walmart, and you can see the move that it's been having. It's up 5.5% just today. But those earnings were actually pretty damn good for BJ's. They have a similar business model to Costco. I think that Costco can come in and absolutely annihilate earnings this time around. I could be extremely wrong on this. But let's, I could be wrong, like I said, but just given the business model here, if you have a Costco membership, you're going to get your money's worth. You're going to go shop at Costco because you paid for the right to buy stuff there, right? You paid for the right to buy stuff in bulk. So I think that Costco, excellent business model. It's been oversold. It's got decent risk reward. And when Target and Walmart came in and shit the bed on earnings, everybody threw everything, including the baby, with the bathwater, right? And so I think that Costco could have been that baby that a lot of investors went ahead and just dumped. And we'll have to see what the earnings revealed today. But I feel really confident about these earnings today. And I think that they could come in and beat pretty handily. Yeah, well, no kidding. So Go Viral says getting your money's worth doesn't make the stock go up, but sales do and guidance does. So we got good guidance and good sales from BJ's. Just as an example, I think that's more of an apples to apples comparison, even though BJ's is a much smaller company than Costco, but they have similar business models. BJ's has gas stations, and so does Costco. We know that gas prices have gone up. Costco is going to benefit from that. Sam's Club, it doesn't even compare to what Costco has. And ask anybody who's a Costco member, anybody, somebody I know that of the 100 people that are watching right now, there's a decent percentage of you that have Costco memberships and they're crowded as shit. I mean, good luck going into Costco and coming out and not spending $300. But that is, something. Oh, no kidding. Go Viral said, my BJ's doesn't have gas. Ours do. And it's cheap. It's cheap gas, much cheaper than you would get at like Shell or something. Nevertheless, I like this. Miguel says better for them to miss so we can grab it at a better price. I mean, what do you want? I mean, it gave you that opportunity. If you missed out on it, that's on you. The stock came down 30% just about from its highs at 612 all the way on to 406. Here's the caveat. it is expensive from a forward PE standpoint. Costco is trading at 35 times next year's earnings. That's the caveat here. It's expensive. So you have to ask yourself if it's worth paying that much for Costco. I think that answer could be revealed today. Their earnings come out today and they crush it. And they are the one that bumped the trend from the Targets and the Walmarts. I think that is something that would be worth paying a premium for over Target and Walmart. Now, this isn't to say that you can't own or shouldn't own Walmart or Target, because they'll come back, and they started to already. Let's take a look at Walmart. They'll come back. Walmart's already bouncing. Walmart had its worst day since 1987. Can you honestly think to yourself that Walmart is actually in a much worse position than it was back then? No. So, or even in pre-pandemic, I mean, we came down to nearly pre-pandemic levels on Walmart, and Walmart's a much stronger company now than it was then too. So it'll come back. But I think Costco, it could be the outlier here. One of the big reasons, and to also think about, Walmart, Target, sales actually beat expectations. They shit the bed and they couldn't execute. And I firmly stand by this. They didn't execute well enough and didn't pay attention to what the consumer was doing to prepare for what they were going to spend money on. And then they overhired. I don't see Costco doing that same thing. And I could be wrong. And this could all be for nothing once earnings come out on Costco at around 4:20 p.m. today. But I just have this strong feeling that Costco is going to be the outlier. I think that they're going to follow the same suit as BJ's. It just makes sense. So we'll see. All right. So, okay, let's see here. This is interesting. I had both and never shopped at Sam's. So Daniel Cecil had at Costco and Sam's memberships and never went to Sam's. That's interesting. Sean Dupuy just spent $500. That's what I'm saying. You can't go into Costco and be like, oh, I'm only going to get a couple items. And then you come out with 2 carts full of shit. You know who you are. Heckmar just said, I just went today, 11 a.m., too crowded and parking was packed. I love this. Jonathan Sharp said, Costco is the cheapest gas, so being a member also saves you on gas and bulk items. Having Costco now with gas as high as it is certainly a benefit, right? I think that's going to continue to be the theme. So Jeff Ponicka says, I'm a Costco member, prefer to order online and avoid the circus. Also, interesting point there. Sean Dupuy says they get me every time. I know. We just had this conversation in our level 3 group as well. If you guys aren't a part of the Chaos crew, you can check out onthechaos.com. But those who are part of the Chaos crew in our level 3 group, we were talking about this today. Mike Hudson in the morning, we were talking about Costco today, and it's pretty funny how nobody can go in there and not spend $300. It's so funny. That's a hell of a date. Oh man, that's the worst. You're taking your wife, you're definitely not spending less than $500. And no wonder you're making an event. You got a budget for that shit. That's a hell of a date, my friend. All right. Well, Cardinal what's up, bro? It says walking into Costco UK and guaranteed to walk out with bottled water and fill up the tank with fuel. Yeah. And that's what I think. That's why I think could also give them the advantage. I mean, I don't think Target has gas stations at all. So that's certainly not an apples to apples comparison for sure. So anyways, the big thing is, non-discretionary versus discretionary, and Costco has way more non-discretionary items that people need. And I think Costco is going to do extremely well. So that's my thoughts on Costco. A couple other ones that are going to be reporting today. ZScaler, definitely one of them that is worth taking a look at today. And that stock has been beaten down significantly. It's up 7% today, but it pairs in comparison to where it was at just in November at 376.11 all-time highs. It's trading at 142 right now. It has a forward PE still of around 250 times next year's earnings. That is expensive AF, people. Okay? Expensive AF. But cybersecurity has been going nuts, and I don't think they're slowing down anytime soon. I have a top 5 stocks coming out for the month of June in over the weekend. So make sure you're subscribed, hit that notification bell so you get notified when my top 5 stocks for the month of June come out. CrowdStrike's on there, just a little preview. And I'll tell you that CrowdStrike's also expensive at 142 times next year's earnings, but the growth here is ridiculous. And I think that Zscaler could pop potentially on some good news. I don't think that chasing it here at 7% is, on the day as it closed, is all that crazy. Their expected earnings per share is 11 cents, $271.8 million in revenue. The projects, so for the third quarter, Zscaler projects total revenues between 270 million and 272 million, reflecting the year-over-year growth of 53 to 54%. Zacks consensus estimate is the same, as pegged at around 271.8 million. And that would suggest a 55%. I mean, that's right up there with Tesla as far as growth is concerned. That's ridiculous growth. So you're paying the premium for growth. This is a company that's still profitable. It's not like they're trading for a ridiculous multiple, and they are also not operating for profit. I think that Zscaler certainly could make some moves. Granted, last time around, they disappointed on earnings. So that's going to be something to certainly keep in mind as well. Some other ones, we have Ulta, that I actually am a huge fan of. The company just is so well run, and they crush it. Stock right now is expected to come in at $4.44 on revenue. Here's your daily chart. And had an amazing day. It was up 7%. $2.13 billion in revenue is the expectation there. Survey conducted by Cohen analysts shows people can plan to stick with their beauty regimen, and Cohen surveyed 1,000 respondents, and 70 to 75% indicated that they would spend the same amount on beauty products this year compared with last year. This is why I was saying earlier on Stockwatch Sunday last week that Ulta Beauty products is a non-discretionary item as far as I'm concerned. Over the last 2 years, Ulta has beaten earnings estimates 100% of the time, and revenue estimates 63% of the time. I don't have any reason to believe that Ulta misses revenue estimates here. Revenue estimates, again, are at $2.1 billion, and I think that demand is still very strong for the company. I actually really like Ulta. All right, so we have a couple of other stocks that are reporting today. Workday is going to be one of them, and it seems as if that stock is falling here. It's down around 3.5%. Here's your 5-minute chart so you can see this live and in person, live in action. Close the day at 170. The stock's now spiked down to 157.8. Here was the expectations. So Workday was expected to come in at 86 cents per share. $1.4 billion was the estimated revenue there for the company. For Workday. Hold on one second. There you go. And so that is going to be an interesting one to watch here. It is down now around 4.5%, still falling. Let me see if I can find those numbers for you real quick. Workday earnings missed 83 cents. As I had said, 86 cents was expected. So they missed on earnings per share. Revenue of 1.43 billion, which kind of came in line with earnings expectations. But the miss on earnings is why this is now trading down 6% after hours. Let's go ahead and see some of the other numbers here for Workday. As I pull those up, operating loss was at around 72.8 million, or negative 5.1% of revenues. Yikes, that's not good. Total revenues were, again, 1.43 billion, an increase of 22.1%. So not terrible. It's still growth. Subscription revenues were $1.27 billion, and an increase of 23% from the same period last year. So year over year. Operating cash flows were 439.7 million compared to 452 prior to the prior year. So that is at a loss. So operating cash flows were less this quarter than they were this time last year. Cash and cash equivalents and marketable securities were 6.26 billion as of April 30th of 2022. So not great numbers for Workday, and that stock's still falling. It's now down 7.25%. Not great stuff there for Workday, even though it's a great company. They'll right the ship, I'm sure of it. But right now, it's actually getting crushed. So Costco hasn't reported earnings, I don't think, as of yet. Usually they're a little bit later. The stock's down. It's flat, actually, in after hours trading. Usually, and you guys can continue to keep an eye on this, but Costco usually ends up reporting earnings about like 420, 430. So yeah, we're probably going to wait a little while on Costco, but let's take a look at some other ones and see if there's any movement here. So just got done covering Workday, is ZScaler. Not really a whole lot of movement there, even though it is up about 0.5%. Doesn't look like that those numbers are in just yet. I am going to check in. So lots of negative sentiment out there. Is checking in on the survey here from you guys, and looks as if 73% out of the 112 of you that voted think that we still haven't seen the bottom of the market this year. Interesting stuff. After a day like today, sentiment's still pretty negative. I got some things that might change your mind. That video is coming out tomorrow, so make sure you're staying tuned for that. I'm going to be the contrarian. I really am. Everybody and their mother on CNBC, on YouTube, whatever, you see the thumbnails, oh my God, stock market's crashing, more pain to come. I'm taking the contrarian approach. I could be wrong, but I think I got some things that you guys will be excited about. So make sure you're tuned in for and subscribe, hit that notification bell to get notified when that video goes live. All right, so ZScaler looks like it kind of is moving. I don't think those earnings are out just yet. Let's take a look at some other ones. Ulta, as I had said, stock's up 10% after already having a 7% day. Stock's up 10% right now. I'd imagine those earnings are out. Let's go ahead and pull those up. All right, Ulta. I'll go out on a limb here and say Ulta probably beat. Let me see if I can find those numbers here. So let's see some good numbers on guidance. I'll get those earnings per share and revenue numbers in a second, but they see fiscal year earnings per share $19.20 to $20.10 per share. The estimate was around $18.20 to $18.70. So a huge beat on guidance as far as that's concerned. Net sales are $9.35 billion to $9.55 billion. That's the guidance. And then the expectation there was at 9.05 to 9.15. This is all good stuff so far is in regards to guidance. Really nice beat on that. I mean, that is, of course, as we know, that's everything. I mean, stock could miss on earnings, but the guidance comes in better than expected, and we could just see it move right on up. Stock right now is up around 9.8%. It spiked all the way up to $430 after closing the day at $377. I mean, what a freaking move on that. All right, so they came in at $6.30 per share. Remember, the estimate was at $4.44. $6.30 per share on Ulta. Sales came in at $2.35 billion. The estimate was around $2.12. What a beat for Ulta. And then with that guidance, I told you guys this is one that I liked. I mean, what an unbelievable move. I love that. I love this move on here. Unbelievable. Really, really nice move from Ulta. All right, so there's your Ulta news. Workday. So Workday came out. They actually missed earnings per share, and they did pretty poorly there. So the stock is down around 7%. Now Ulta came in and just absolutely annihilated earnings. Let me see if I can pull up some other good numbers here. There's got to be some good juicy numbers in here as well. Give me just a second. Lots of stuff to love here. I mean, what a rip. What a rip on Ulta. I mean, to be up 7% and then go up another 10% on the day. My goodness. Net sales increased 21%. As I'd mentioned before, 2.3 billion compared to the 2.1 that was expected. Some of the expectations are a little bit skewed here. I have 2.1 and then 1.9, a little bit all over the place, but they're around about the same area. But that is a pretty decent jump in sales. Comparable sales for stores open at least 14 months in e-commerce sales increased 18%, driven by a 10% increase in transactions and a 7.3% increase in the average ticket. So that's pretty nice for a same store in-store sales. Gross profit increased 941 million, so almost a bill, compared to the 753 million in this quarter last year. So year over year, that's a significant increase. Percentage of net sales, gross profit increased to 40% compared to 38.9% in the first quarter of last year. So another impressive beat there. What a story. Operating income increased to 437.7 million, or 18.7% of net sales, compared to 305. That's a massive increase. 15%, 16% of net sales in the first quarter compared to the first quarter of 2021. That is unbelievable. I mean, I love everything about this report. Now, the real question is Ulta a buy from here? Is it too late? $409 is where it's sitting at right now. We saw recent highs as $438. Did you miss the boat on Ulta? Well, considering this was trading at 20 times next year's earnings as far from a forward PE standpoint, and they came in and just crushed it. So I would imagine that this probably actually does go higher. We could test that 438, and I think we could do it easily. I don't think that's going to be that hard to get up there. So if it does, and we see, 404 is where it's trading at right now, it starts giving back some of those gains. I say that it's on the table. I say that it's on those earnings, and those numbers are incredible. I really think that they are. All right, let's check in on Costco, see if there's any movement there. Nope, nothing. Usually, like I said, guys, Costco, let's go ahead and pull up the 5-minute chart. Costco puts their earnings out a little bit later in the day. Yeah, absolutely. Absolutely, Snookeroo. Who says retail is dead? What a move on Ulta. 100%. I mean, what an amazing move on that. We also have a couple other earnings. Let's go ahead and check out Marvell. MRVL is the ticker there. That's selling off now 2.5% down on the day after having a pretty impressive day. It was up around 6%. Let's take a look at that. Those numbers look like they're probably in. Yep, here we go. So Marvell came in and they beat by a penny on earnings per share. 52 cents was the actual earnings per share they came in. The expectation was around 51. They beat $1.45 billion was revenue. They beat by around 20 million. So decent beat there. I'd imagine the reason it's selling off a little bit could be related to guidance. Let's see. They guided to $0 this quarter, apparently. Is maybe that's, I don't know, that's interesting. So they beat, but I'm looking for guidance numbers. They see here we go. Q2 adjusted earnings per share 53 to 59. The estimate was 55, so in line with that too. So I guess that it could have gotten punished a lot more here, but they beat on earnings. They beat on earnings on revenue as well. And I would say that, let's just say they came in line on guidance. So it's not that shocking. The stock is only down around 1.5%, 1.32% for earnings that weren't really like mind blowing. So I wouldn't say that they shit the bed, but I wouldn't say that they did all that great either. They just came in line, and that is what it is. So there you have it. That's Marvell. And maybe it starts to move up. Maybe there's something else in that report that people will get excited about. But so far, those are your numbers on the stock, and it's about flat now on the day. All right, so there's a couple other ones. Gap also has earnings today. It doesn't look like those numbers are out just yet, but I'll give you the expectation. Gap has expected earnings per share of a loss of 11 cents, $3.48 billion in revenue. In 2021, Gap's full year revenue was up 21% year over year and was nearly 2% above 2019 levels. However, the company faced headwinds with supply chain issues weighing heavily on its performance in 2021, particularly driven by longer transit times from West Coast port delays and the sudden prolonged closure of factories in Vietnam. Stop me if you've heard this story before. To avoid congested ports, Gap chose to ship a larger portion of its merchandise via air freight services, and these more expensive shipping options also weighed on its profits in the second half of the year, which is why we're expecting a loss here of 11 cents. Right now, the stock's trading down around 1%. I don't think it doesn't look like, just looking at the trading activity, that the stock is released their earnings just yet. But as soon as they come in, I'll certainly share those with you. Yeah. Okay, ZScaler, let's check back in with them. Stock is starting to jump here, and this is good to see. I mean, ZScaler did not do well on earnings last quarter, and it looks as if maybe they came in and perhaps crushed it. Stock closed up 7.5% or 7.25%. It's up another 4% right now. Let me see if I can pull those numbers. Just to give you the expectations on Zscaler one more time. The expectation was at 11 cents per share, 271 in revenue was the expectation there as well. Again, high multiple. Obviously, you're paying a premium for this, but they came in and beat pretty handily. 17 cents per share was the actual. So 11 cents was the expectation, 17 cents was the actual, and they came in at $286 million in revenue. Remember, I just got done telling you that 271 was the expectation. So pretty solid beat there. They beat by around 15 mil. Really good beat there on Zscaler. So they beat on earnings per share. They beat on revenue. I'm looking to see what guidance shows right now on Zscaler. This is good stuff. They see Q4 adjusted earnings per share 20 cents to 21. The estimate was 17. So also a beat on guidance as well. Hey, lots to like here for Zscaler. This is what I was kind of talking about earlier. Like, it is definitely a premium that you're paying for cybersecurity right now, but the growth is there, guys. It is. All right, let's take a look at Costco. See a lot of you guys talking about Costco now. Looks like, what do you mean Costco's dead? Had a quick spike down to 450. Looks like those numbers might be out. Let's take a look. So just to give you, again, a recap of those earnings expectations for Costco. Costco is expected to come in at $3 per share, $51.76 million in revenue. Take a look. See what we got. I think that was just a random spike. I don't think those numbers are actually out yet. Well, looks like they might be. Hold on one second. So revenue came in so they beat. They came in, revenue came in at 52.6 billion. 51.5, as I had mentioned, was the expectation. So they beat on revenue. They also beat on earnings per share, $3.04 compared to the $3 that was expected. Guidance is also looks like it's pretty decent. They see fiscal year adjusted earnings per share 30 to 60 cents. They saw 1.85 to 2.05. Sales estimated was around 1.32. That's pretty good. So let me see here. Right. One more. Let me do another refresh. I want to see those guidance numbers. I want to just cross-reference the guidance numbers there. I mean, if I was Walmart and Target management right now, I would be like, guys, we fucked up. Remember, I was saying that I was talking about this early in the show. I also talked about this last week that I strongly felt like there was poor execution on, C-suite executives of Walmart and Target. They just didn't see it. They didn't adjust. They didn't execute well at all. Really decent beat there for Costco. I'm still trying to find those guidance numbers. I don't have them just yet. As soon as I do, I'll give them out to you. Okay. Let's see here. Costco future guidance will raise the price on hot dogs to $2.50. I think that is probably not. I'm just looking on Twitter. That's hilarious though. If that's the truth, hella bullish on Costco if they raise price on hot dogs. Wasn't that like a controversy? Wasn't there a big controversy around Costco raising prices on hot dogs? I feel like that was. Stock right now is down around 1% on beating earnings and beating revenue. Still trying to find that guidance number. Okay. Still nothing on guidance. As soon as I find that, I'll certainly share that with you. But let's go ahead and check out a couple other stuff as I'm waiting for the rest of those numbers to come through. But Gap also had earnings, and that stock is tanking right now, getting absolutely wrecked. It's down 15%. I'm sure it has everything to do with the shipping costs and inflation. Jesus. Estimated earnings per share for Gap was a loss of 10 cents. Came in at 44-cent loss. what did I say? 11 cents, I think was the loss, was what I had, but a loss of 44 cents. Horrible miss on earnings per share, but probably due to inflationary costs due to shipping. $3.48 billion in revenue. The estimate was around 3.46, as I mentioned earlier. Q1 comp sales were down 14%. The estimation was going to be around down 9%, or we'll call it 10, 9.9. 14 down 14 is not good. Stock's probably going to continue to sell off here. It's getting wrecked right now. It closed the day at $11.12. It's now sitting at $9.50 in after hours. Whew, that's rough. Rough for Costco. Or rougher, sorry, for Gap. I'm looking at Costco now. That's only down around 0.5%. I'm wondering if people just aren't like super surprised that Costco did this. I don't know. I'm curious as to the reaction here on why we're seeing this kind of just chill here. But as we always know, just because Costco beats earnings, or just because any stock beats earnings and beats revenue estimates, doesn't mean anything. We want to see good guidance, and that's what I keep looking for. It looks as if perhaps the Wall Street whisper for Costco is around 313, so maybe that's why they're not so excited about it. Who knows? I really want to see the guidance numbers, though. I love this. Lance says, literally just dropped my $200 at Costco. They will win. I drive past 4 Walmarts and 2 Sam shops at Costco. Yeah. Oh, here we go. Stephen Hoyer says Costco will never raise the hot dog price. Its founder and former CEO Jim Senegal made it a stipulation when he steps down that the company would never raise the price no matter the loss. Interesting. I didn't know that. I appreciate the knowledge there. Had no idea. That's pretty funny. All right, so there's 350 of you guys hanging out here with me today. I certainly appreciate it. We're getting to the point in the show where we do the over-under segment. So make sure you guys are putting over-under and your favorite ticker in the chat. And then I might evaluate your favorite ticker to determine whether or not I think it's overvalued or undervalued. This has been a real hit with our crew members and with those of you who are returning subscribers. So make sure you put over, under, and your favorite ticker in the chat, and I might just show up on today's stream. Doesn't have to be anything related to earnings, but I do cover this in the show every day as a part of our earnings reaction. So make sure you're putting them in there. Would love to hear your guys' thoughts on over, under, and what you think. And I might just let you know what I think about your favorite stock. Make sure you put over, under in the chat and your favorite ticker. Otherwise, I'll probably end up missing it. I got to be able to see over, under in there so that I can check it out. So I'll determine whether or not your stock is overvalued or undervalued. All right, if you guys are just tuning in, there's 350 of you guys chilling in today's chat. So make sure you hit that subscribe button if you're not already, or hit that notification bell, and you'll get notified when I go live every day, Monday through Thursday at 3:45 p.m. Eastern time to cover earnings. I cover this every day. I love it. It's so much fun. Costco reported earnings. They actually beat on earnings per share, coming in at around $3.04. Also beat on revenue, and guidance numbers are kind of elusive at the moment, but they beat. It doesn't look like there's any guidance given. So maybe that's why the stock is kind of reacting the way that it is. Did they pull their guidance, perhaps? We might have to wait till after the a conference call to determine what's going on there with Costco and their guidance. But it looks as if they didn't give any. So that's why we're not seeing it. But either way, a solid beat. And I think that Costco is still one to hold on to, guys. Whether or not they pull guidance is neither here nor there. I think there's a lot of companies out there that are just being overly cautious. I mean, we heard that about NVIDIA, right? Overly cautious on the guidance. That's why they kind of came in a little bit lower than expectations. But yeah, I mean, look, we'll have to wait to see what the earnings call says. As we know, many times the earnings call will come out and the stock goes crazy. So here's the other thing about Costco, and I don't know if you guys caught this in last night's video, but I talked about the special dividend. It time-wise, it's usually about every 2 years they'll come out with a special dividend. It's probably about 10x what their normal quarterly dividend is. So their quarterly dividend right now is around 89 cents. Last special dividend that came out was around December 2020, and that was $10 per share dividend. and you never know when they release it. It's they don't announce it. It's insider information if you know about it. So they and I used to work for T. Rowe Price. Costco was my biggest client, and we didn't even know when they were going to announce a special dividend, and we didn't know until we walked in that morning when they announced it, and Costco employees would call me like crazy. My phone would be blowing up. But the special dividend is always a big deal for Costco. It is always a massive number. So keep that in mind. It's been about 18 months now since the special dividend, and we could be coming up on that soon. I'm not saying it'll be here this week or next week or maybe even next month, but sometime, maybe before the end of this year, we'll see a special dividend from Costco. All right, so I see you guys talking about Dell as well. Dell is up around 6%. Was kind of up modestly today, around 1.5 on the day. Now up 6% after hours. The expectations for Dell was $1.40 and $14.9 billion in revenue. Did anybody know that Dell still crushes it like this? Because I didn't. I haven't looked at Dell in a minute. And for them to bring in $15 billion a quarter, that's impressive still. That's impressive. I mean, unbelievable. I had no idea that Dell still brought in numbers like that. But listen, they're still crushing it. Good for them. Let's look to see what those numbers actually came in at. Looks as if they came in at $1.84. I want to corroborate this. Yep, $1.84 was the actual earnings per share. Again, the estimate was around $1.40. And the estimated revenue number might be off. Nope. Q3 revenue was 26.12 billion. But the estimate was at 25. So they beat on revenue as well. I think that my numbers might be wrong there on my expectation numbers on Dell. But it looks like $1.84 versus $1.40 was the actual earnings per share. So pretty decent number there. They came in at 26.12 billion versus a 25 billion. That's still an amazing number. That's still an impressive number for Dell. And the stock is still up 7% after having a halfway decent day today. But pretty decent numbers there for Dell. Let's take a look at some of the other numbers here. Record first quarter operating income of 1.6 billion. That's up 57%. Jesus, I had no idea that Dell was still growing like this. Record first quarter non-GAAP operating income of 2.1 billion. That's up 21%. And another record first quarter diluted earnings per share of $1.37 and up 63%. Jesus. I had no idea that Dell was still doing this well. No idea. This is great stuff, guys, for Dell. I mean, this is amazing. Okay. Oh, here's a good point. Adrian says if you're in photography or graphics, it's either Mac or a Dell. Dell is huge today. Yeah. I build my own computer. I bought like a pre-built and then like added stuff to it. But I mean, I'm not in photography. I guess I'm in videography, but I would imagine it's the same. Okay. Let's see here. Let's check back in with Costco. If you guys are just joining us, Costco came in and crushed it on earnings and revenue, but it looks like they didn't come out with guidance. And so that's why the stock is selling off. Ulta absolutely smashed earnings and did extremely well. This stock came in and beat, or this company came in and beat on earnings per share. They also crushed on revenue. They came in much higher than anticipated on guidance. People out there still spending money on beauty products, guys. It's essential. Just ask your lady. They're crushing it. I mean, absolutely crushing it. The stock's up almost 8% after already being up 7% on the day. Now up another 8% after hours. That's wild. Good stuff there, man. Really love that move. There was a couple of other ones. I see that Divis is it Divis asking about Autodesk. I don't know much about Autodesk at all. I did see that they had earnings. Not much movement there. I don't imagine that there wasn't much to report on their earnings. Let me see. ADSK. Looks like they came in 1.1 1.7 million versus 1.14 on revenue. Operating income 397,000 versus 369. So pretty good stuff. They came in and beat on earnings per share, $1.43 versus $1.34 estimate. So they missed, or they beat, sorry. And the deferred revenue they missed on. So there's your numbers for Autodesk. Stock's not really doing much. It's only up around 0.5%. So no big deal there. I bought Costco puts before the close at its highs. Well, hopefully that stays, my man. Hopefully Costco doesn't pull the rug on you when that conference call comes out. The stock is down around 3% after an earnings beat, which is interesting. Did I miss the portion? Here's Corey. Corey says, did I miss the portion where you talked about today's rally from today? Is it sustainable every time we push up to EMAs? We've dumped shortly after. It's a very good question to ask. So I'll just address this. I actually didn't address the overall market today because there was a lot of earnings to cover, but I am coming out with a video tomorrow regarding my thoughts on today's rally, and we'll see what happens tomorrow as well, and whether or not I think it's sustainable. Some of the biggest rallies in the market that we ever see are in bear markets. And we're in one right now. We have the S&P that hit 20%, down from its highs, and the Qs, Nasdaq was down 32%, as much as 32% from its highs. Is it sustainable? It's a good question. I'm not sure if it is or not, but I gave you guys. Make sure you tune into tomorrow's video that it's going to be coming out. I have some really good tidbits information that could give you some positivity that we could start to see this move up. And there's some really clear signs to me that we are at a potential bottom. Nobody's going to be able to predict accurately when the bottom actually is at that time. Of course, hindsight's 2020, but there's some positive signs here. And look, the consumer's still strong. I mean, we're seeing some of these revenue numbers come in and sales numbers on retail, and they're phenomenal. Consumers is hella strong. So, nothing goes straight up. But I think that there's definitely a case to be made that perhaps we're either at or close to the bottom. So make sure you guys are tuning into tomorrow's video. I'll give you guys some good info. Got some good statistics that you, I think, would appreciate. Stop Console War says, we ain't afraid of no bears. Bring it on. Yeah, absolutely. All right. So let's get into it. Over under. Over under on IBM, Jeff Panicka. I like this one. Jeff Panicka asked over under on IBM. IBM tech dinosaur, right? I mean, it's been around since before the dot-com bubble and has continued to do extremely well. This is trading at 14 times next year's earnings, guys. A stock that's trading at 14 times next year's earnings. Pretty crazy to think about. This was trading as high as $152 a share, sitting at 136. So while it's down from its highs, not nearly as bad as a lot of the other tech stocks, right? To me, I think actually this was just the highs that were back in June of last year. This actually spiked as high as 158 back in January of 2020. Hasn't really looked at those numbers, but nevertheless, I think it's undervalued from a forward multiple standpoint, and they actually do have some growth going on. Let me go show you guys the chart here. And you can kind of see what's happening. I think that there's definitely a case that you can make that it's undervalued. I would watch for a potential move to break this current downtrend that we're in, just this short-term downtrend. Watch for a move up around 138, 140, and IBM could start to do really well. This is always just a good value stock to hold, though. I mean, and obviously, I think Jeff is in that camp that where he's looking for some good value. I think this is definitely good value. IBM, in my opinion, is undervalued. Over under on NVIDIA. Very challenging to determine whether or not NVIDIA is overvalued or undervalued, right? Because from a forward PE standpoint, it's expensive. It's trading at around, what did it close at today? 31 times next year's earnings. But this was trading, at 155 when it came down to those levels. The forward multiple was as low as it has ever been since the stock has been public. Isn't that crazy to think about? That's the lowest it's ever been. And that was around 28, 29 times next year's earnings. So wild. But that's the premium that you pay for something like NVIDIA that has insane growth. The data center numbers were ridiculous, 84% year over year growth in that area. And I think that they're going to continue to crush it. NVIDIA, in my opinion, despite the 30 times next year's earnings, is undervalued. I think it is a solid buy still. And no, you're not chasing it, even though it had a 5% day. Consider this. It was trading at $346 back in November. Now it closed the day at 178. You still got plenty of runway here. And you could always wait to see if there's confirmation of a trend reversal. But I think we're getting there with NVIDIA. And those numbers on those earnings were quite impressive, despite the lower guidance number. Really, the lower guidance number was because of Russia and them pulling their business out of Russia. And it was attributed to what was going on in China with their lockdowns and that sort of thing. I think the China situation is temporary, and their exposure to Russia was very minimal. So I don't think that there's anything that I would worry about there. And I think that NVIDIA is undervalued for those reasons. Foot Locker came in with earnings last week, and they crushed it. They actually did pretty darn good, all things considered. This is a stock that's now trading at 7.5 times next year's earnings. It's finally found a bottom at around $28. It closed the day up around 2% at $32.70. And it's been doing pretty well since their earnings. And I think that there's certainly a possibility that this continues to go higher. We just got an upgrade from a bunch of analysts on Lululemon, obviously in the same space. Foot Locker, in my opinion, could do really well. Their sales are up. Consumer spending is still up for Foot Locker. I'd say it's undervalued at 7.5 times next year's earnings. That's wild stuff. Okay. Here we go. Over under on Marathon. Oh, this is a great question too. I love these guys. You guys are bringing them some challenging ones. Marathon's up 160%. No, sorry, 120% over the last year, over the last 52 weeks. It hit another 52-week high today. WTI crude touched 114, I believe, on the day today. Let me see. Yeah, $114.13. So it was up 3.5%. So that was WTI crude today, as Marathon Oil hit not all-time highs, 52-week highs. Marathon Oil breaks even on their revenue, their profit margins. They break even at $35 a barrel. So you tell me. I mean, last time we saw $100 oil, this is where Marathon was sitting. Here's your weekly chart. Marathon was sitting all the way up at 37. So last time we saw anywhere near $100 oil. This is 2014. And so we got plenty of room to run here for Marathon. I think that it's still undervalued, believe it or not. I still think it's a pretty decent hold. So there you have it on Marathon Oil. All right. Let me see a couple of other over-unders from you guys. I love the ones that you all are bringing in here. We just covered Crocs the other day. It's still undervalued. The forward PE is ridiculous on that. Honestly, very unbelievable to see that there. And this is also a painful one for me. Over under on Airbnb. This is one that I actually got wrong, and I don't know why I got this wrong. I still have a lot of conviction on Airbnb. Here's your daily chart on here. I'm sorry, this is your weekly. Let me come back to the daily. This is your daily chart on Airbnb. You know, it had a halfway decent day today. It's up 3.5%. Travel, in my opinion, is still ridiculous. I mean, we're hearing this from air travel. We're hearing it from United Airlines. We're hearing it from Delta about how they're seeing record revenue growth in that space. And if you're getting on a plane and traveling on vacation, chances are you're using an Airbnb to get there or to stay there, wherever you're staying. And so I think the Airbnb is still going to be one to hang on to. I got this wrong. I'm still in it. I'm still holding on to it. I have leap options on this that don't expire till well into next year. So I'm not all that worried about it in the here and now. It's tough to watch it all the way down here. So I have to say it's undervalued. Yeah, it's got a high PE, but the growth here is absolutely ridiculous. And I think it's worth paying the premium for. Airbnb, in my opinion, is undervalued. Yeti is also an interesting one. Let's see here. So Yeti was a pandemic winner, right? If you needed to be outside and you wanted to drink outside, do some day drinking, you want to do some camping during the pandemic and stay away from everybody, Yeti was your stock. It went all the way up to $108 back in November and is down over 50% since then, just at the close of the day. The stock was up 8% and it's still down 50% better than 50% from its highs. So unbelievable how far this has come down. It's trading at 15 times next year's earnings. I think this is appropriately valued now. When it was at 108, I'm sure the PE was extremely high. It's undervalued. I think that Yeti could go up and sit up above $54 a share. I think that that's certainly where a reasonable area that Yeti could live. But it's now reached a point to where it's attractive. You know, it was overvalued when it was at 108, but I think it's attractive now. This is one that I really like. All right, guys, that's going to do it for today, for this week. I appreciate every single one of you. So many of you guys came in today and hung out for the earnings reaction for Costco. And if you liked today's stream, make sure you hit that thumbs up on your way out the door. Tomorrow, like I said, I'll be putting out a video as to whether or not I think the market has potentially bottomed and give you a couple of signs as to why I think it may have. And so make sure you're subscribed as well and hit that notification bell to get notified when that video comes out. I think you're going to really look forward to that one. So guys, thanks so much for hanging out, and have a great weekend. Market is closed on Monday, so make sure that you keep that in mind, and be safe out there. Thanks, guys. See you later.